Hello, and welcome to another update video about gold. So we talk about the gold futures. The price actually rallied, formed or held support in the support area provided in the last update. I have since then removed it from the chart because we don't need it anymore, but there was a support area here. You might remember that from the last video. The price rallied higher, not entirely impulsively, right? So at the moment, and the problem is there are many ways how this could be counted, right? So the corrective patterns in the subwaves, which essentially lead to this potential diagonal pattern that we're tracking, they are definitely introducing complexity, okay? That's very important to understand. So you need to understand in which environment you're trading if you're trading this. I'm tracking this as a potential diagonal pattern to the upside, as you know. The white scenario seems to be leading at the moment. I'm still watching for higher overall, even in the yellow scenario, which allows for lower prices. This is a larger degree bullish case, but it takes a break first below 2,647 support, followed by a break below the red line at 2,598, sort of, to confirm that this yellow scenario is taking the lead. What I don't like is the microstructure in the decline that we've seen, because it looks a bit like a 5-wave move down. So I'm not confident we've bottomed here already, but the idea is overall that this could have been an A, B, C structure in wave 1. Then we had a wave 2, which held our support area. This could have been an A wave up, B wave down, and in this area, ideally the price forms a low. And then we rally in wave C of 3. To round about 2,800, then we could get a fourth wave and a fifth wave. This is sort of the primary scenario at the moment, but as I said, I'm not convinced that the price has formed a low here. The problem is that this looks a bit like a 5-wave move down. You see that maybe. So it's questionable whether this is already all of wave B. Right? Now this could simply be something like 5 waves down in wave A of B. It's forming a bounce. The higher the bounce is, the better for the scenario. Then a C wave down, and then we go up. Okay, so the support area is relevant here, but the problem is a 5-wave move down also opens the door to maybe a larger correction overall. Maybe this is wave 1 to the downside in the yellow count of a large 3 down. 1, 2, 3, 4, 5. Essentially, what's also possible is that wave 1 sits here, and this is a larger wave 2. And then this is A wave down, B wave up, C wave down. So if we break support, please note that the main level to watch next is here at around 2,597. For now, nevertheless, even though this is a micro 5-wave move down, we're in a support area. I'm watching for a reaction here, but it can make sense because of what I just showed you, that due to this 5-wave move down, lower prices are high risk and actually not improbable. It can make sense to watch for a first 1-2 setup, or a first rally and a higher low, as I also said would be the case here. When the price dipped into this support area, I'll just bring it onto the chart again, just to visualize this. The price held the 78.6 fib level. It looked a bit like a 5-wave move down, but I said we'll still, as long as support holds, we can watch for higher. And I said, but it can make sense to wait for like a first 1-2, so like a first rally and a higher low to get active, right? And then there was a series of higher lows and higher highs. So it can make sense to wait for a first reaction that looks impulsive before entering like an aggressive uptrend or something, uptrend trade, long trade. For now, this really looks a bit more like a 5-wave move down, but we're dealing with a very small time frame. And overall, the context of this chart hasn't changed in many weeks. But obviously, I try to give you latest insights into what I believe are the key support levels, pivots, wave counts. So I'm tracking primarily the white count, okay? But I'm saying to you, the decline looks a bit like a 5-wave move down, so it's not high confidence. It would be a diagonal pattern anyway, which can't be trusted. It means that the next bounce, and even after this 5-wave move down, the bounce should tell us a lot, because if the move up is correct, let's say you enter here. Let's assume you might find an entry point here. Let's assume and it rallies only corrective, so it's weak, maybe choppy, overlapping, then it might be the time to get out or move up the stop to break even. Whereas if you clearly see that it's a C wave up because it's rallying impulsively, you know, then you don't want to get out. So it will be the structure of the next rally that will tell us a lot. And it really makes sense to wait for like a 1-2 setup, like a first rally and a higher low because of the context here, the context. But even if we break below support, if it's a B wave sometimes don't respect support levels so much. This is not an invalidation point like the 78.6 retracement, right? It matters also, you know, do we hold this red line? That's really key because a larger 1-2 setup could apply here. And I would want to track that before committing to the yellow scenario. So I've got two key support levels, you could say 2,647 and 2,597. We're currently clearly still in a corrective, but likely in an overall uptrend. So we're in the correction, likely in an overall uptrend. And I don't have any evidence that this local pullback has finished. But as soon as we get above that last high there, you know, at 2,690, that might be the first indication we are trying at least a local breakout. So that's the update about gold. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you're interested in daily updates about the S&P 500 as well as regular updates about stocks, feel free to check out our stocks and S&P 500 service. You'll find the link in the description. Thanks a lot. Bye-bye.